Hey friends, welcome back to Millennial Realtor Monday. Woo woo! So I am Keyra Ford. If you're new here, guys, my channel talks about real estate tips and tricks and dance fitness go-tos and much, much more. So I have a special guest with me today, which is Kelsey. I'll give her a couple minutes to talk about herself, but today we're going to talk about the pre-approval process. So tell us a little bit about yourself and then I'll jump into the questions.
Yeah, of course. So my name is Kelsey Acosta. I am a loan officer over at Willow Bend Mortgage over here in Dallas, Texas, serve all of Texas. So if you are wanting to purchase a house, I'm your first stop when it comes to budgeting.
For sure, yes. All right, well, let's just jump into the questions. I have them on my phone, so let's see. All right, so tell us the difference between pre-approval and then pre-qual.
Okay, perfect. So when I send a pre-approval letter out, I am looking at a full pre-approval. I never really give a pre-qualification. I'll let you know why and the difference. So when I get an application in from my clients, I look at three things. I look at your income, your assets, and your credit. And with those three things, I want to make sure that we've got the supporting documents to prove what you're putting into the application. That way, if we're going out and buying houses, we are looking at all three of those things.
For sure, what you can afford versus just what you think you can afford.
Exactly. Yeah. And so when we go into like the pre-qualification realm, it's kind of subjective. It's me talking to you on the phone and then getting kind of an idea of what we're wanting to do as far as your income, assets, and your credit. But a full application with those supporting documents is going to be a full pre-approval and help.
Yeah, for sure. Okay, great. Because I think that some people think the pre-qual is better just because they don't have to send in documents, but it can very much change because it's just verbal. Like,
right, exactly.
I make 100,000, but do you make 100,000? So, yeah, we hope for sure. My second question would be, what are the documents that they need so that you can, get that all together?
Yeah, of course. So if we're looking at someone who's salaried or hourly, we typically look at your W-2s from the past 2 years, past 30 days of pay stubs. I may ask for a little bit more pay stubs from your year end, depending on how we get paid, like if you get commission or bonus. We just want to see the layout of those different items. And then when it comes to tax returns, usually self-employed borrowers will send me their tax returns so we can see the certain claims and the write-offs.
Awesome. I think we should elaborate a little bit on the self-employed just because I feel like a lot of people they're self-employed. Their like side hustle has become their main hustle now.
Of course. It's the norm. It's the norm.
It is the norm. So tell us how different it looks to look at someone who's, self-employed versus just regular employed.
Yeah, of course. So if you're enjoying that hustle as someone who's self-employed, congrats, because you're making it. But we want to make sure that what you're earning is really what you're claiming as your income. There may be some things, some expenses that we write off that aren't typically considered income. So when we look at like a grand scheme of what your income is, we want to look at the past 2 years of your tax returns and see if we're continuing to climb with that income. So the best way for me to put it is just send me your tax returns for the past 2 years. Let me look at it and I'll tell you what we can claim as your income and then qualify you based off of that.
So with self-employed though, I know that you take the two and you kind of take a summary of them. You don't take the highest, correct? Or you don't take
So what we do is, I'll look at the 2-year history. And so we're in 2020 right now. So if you're watching this in the future, but 2018, say your income is around 50K and then your income in 2019 is 70. We want to take an average of those two. If we are declining in our income as self-employed borrowers, we want to take the lowest of the 2 years, so that recent year that's low or declining, just because we want there to be a consistency with your income. So if we are declining, we'll take that last year.
Awesome. That's something people need to know. My next question is, what credit score is required when buying a home and trying to get pre-approved? So
every program is going to be different.
For sure.
So just in a simple way of saying it, 620 or above is going to be great, especially if you're looking into certain programs like down payment assistance. 620 is that sweet spot. Now, the higher your credit score, the lower your interest rate. So it's going to really help these people who have higher credit scores save money over time with that low interest rate.
and 2, do you look at all 3? Kind of give a small summary about when you run the credit.
Yeah.
Do you pick the one that's in the middle, the average? Okay.
Exactly.
Because a lot of people get confused. They're like, well, and if they're married, you don't take the highest or the average between it. You take the lowest out of the couple.
So I'll explain a little bit on that. So when we check your credit, we look at the 3 bureaus, Equifax, TransUnion, Experian, and we take the middle score as your qualifying score. So there's a range that we'll receive, but we take that middle score as the one that we use for qualifying. Now, if we have 2 borrowers on the application, so you're married or maybe you're going
co-signing.
What we want to see what the middle score is for borrower 1 and the middle score for borrower 2, and we take the lower of the 2 middle scores for qualifying. So everyone, credit score is amazing. Like we need it to be at 620 or above. So it's really important to keep up with that.
It is. And then I'll also be interviewing Maria Smith, who will talk about how to keep a great credit score or get a great credit score. So I have 2 more questions and then we're out of here.
Yeah.
The next one is, okay, so when you do the pre-approval, is it a hard inquiry? Can you kind of go into that? Because some people are like, I don't want to, get pre-approved right now because I'm scared that it's going to mess up my credit. But it only really drops it 2, maybe 3 points.
It doesn't really do much to your credit score. A lender is going to need to do a hard inquiry to see what your true credit score is.
And it is a hard inquiry, yes.
Yes. So, I hate to say hard just because it sounds like a tough word, but it is what it is, you know. So really, we want to do that just so we know up front what credit score we're working with, and then the debts that are associated with your credit report. Because if you just give me a number, what your credit score may be, I can't see if there's anything like collections or charge-offs that we need to tackle, or maybe there was something that you're paying that you don't really know that you're paying. We want to make sure that we collect and show all those debts on the credit report, and then we get a true score. Often I'll get people who say, well, my Credit Karma says, or my credit card reports my score to Experian. Yes and no. Really, your lender is going to be looking at specific credit scores when it comes to those 3 bureaus. So Credit Karma may be off. I've seen it off between 20 to 60 points. It's more, you'll be more comfortable going through with that credit check, knowing where you stand, and it'll build your confidence on what you can afford and budget for.
For sure. And then my last question, which you kind of touched on, which was collections. Do collections matter? Kind of give us a little bit of a summary on, if it matters and what exactly they would need to do to
Right. Exactly.
proceed on.
Exactly. So when I'm looking at your credit report, I want to see what's called non-derogatory accounts. So accounts that are really, really healthy, no late payments, we're on time with those payments, and then we're not just letting them go. And if we do see that there are some derogatory accounts, which means maybe there's a late payment or they're in collections or the charge off, we want to tackle that. And I wouldn't say it's going to totally deter you from purchasing a house or qualifying for a home loan, but we want to make sure that we've got those few things nipped in the bud. And so if we need to delete a charge off or a collection before moving forward, that's something we can look at. I also like to get a credit repair specialist involved so that they can tell us exactly what is needed to move forward.
Awesome. And that kind of leads us into when we'll have an interview with Maria, and she kind of will touch base on that as well. Kelsey, tell them how they can, contact you, reach out to you to, apply for a loan.
Of course. So pre-approval is the first step, so I'd love to help you with that first step. When you go through the pre-approval process, you're going to want to get an application in, and you can reach me to get that application at KAcosta, so KACOSTA @WBM.com, or you can reach me on my cell. You can text or call me at 214-803-7129.
Yes, and I'll put all that information down low in the description box. But thank you so much.
Yes, and of course, I enjoy working with you. She's such a pleasure. Just her energy alone. But thank you for having me on. I appreciate it.
Of course. All right, guys. Until next time, make sure you like, comment, share, and subscribe. Definitely subscribe or share because we need to get this information out. Okay.
Yeah,
all right. Love y'all. See you next time.
Bye.